Decision Plus has been and still is a leading stock market service provider. From training to coaching, we cover it all. Try both our software as well as our coaching site, completely free for 10 days without obligation. No credit card is needed to sign up for the trial. The trial subscription will be automatically canceled for you at the end. DecisionPlus.com, your stock market service center. Real-time coaching has been created. We search and classify critical reports and technical movements. You can visualize or hear the best buying and selling opportunities. Get real-time advice all day long and 3 live coaching shows per day. Let us do the work and save your time for trading. Try marketgurus.tv free without obligation for 10 days in the menus above. Market Vision Plus is the trading companion of so many investors. Make your fundamental and technical analysis easy with Canada's #1 stock market decision-making software. Research, decide, and follow your positions with Market Vision Plus. See the menus just above this program and try Market Vision Plus for 10 days without any obligation after the show. When it comes to day trading, Trader Plus is the right tool. Track 50 quotes simultaneously, create dozens of quick lists, display as many as 30 real-time intraday charts at the same time. Watch the action with candlesticks or bar charts as fast as 10 seconds. See the market by sectors. Use the chart models already prepared for you. Try Trader Plus for 10 days in the menu above without any obligation.
Hello everybody, welcome to the Swing Trading Show. Today we're Monday, August 31st, 2015. The question bar is open, folks. If ever you have any questions, feel free to ask them. Today it remains a market that is neutral. If we take a look at the situation here on the indices, we're still bounded by this new neutral range that we have on the NASDAQ, the Dow Jones, and also on the SPY. So definitely in terms of trading, it has been really tough though, because really we have no direction on neither indices, not even the TSX. If we take a look at the situation here, this is the neutral range that still persists on all indices, and as long as we stay there, there's definitely almost nothing to be done, except there have been some opportunities for day trading on this rebound that we have had here on all indices. But this rebound that we had, it has been purely a day trading opportunity, mostly on the resources sector. I'm talking of stocks in the energy sector, some stocks in the mining sector that have been also really active. And now if we take a look at why we have here oil that is surging, so I'm taking Al's question now. Do you know why oil bounced back today? Thanks. Well, Al, what we have found is that the Department of Energy in the US has released the data concerning the oil inventories, and it shows that the oil inventories has declined compared to the last 2 months. So this is something that investors like, because when there's less oil in inventories, well then that means that eventually we're going to have a surge in prices, because if ever we continue to have less supply, less companies that produce oil, eventually demand is going to cope with supply, which is still in excess of demand. So this is why we have this upward momentum, this rally on oil, because of the lower production after the Department of Energy released their data. Now, if we take a look at the energy sector, we're still unable to reverse that downward trend. So at opening, we deflated. We lost all the upward momentum after reaching a target of 180. Now, finally, we have a resuming of all the points that we lost. So it was mostly an opportunity for day trading. The strategy that we laid out on marketgurus.tv that you can have access for free for 10 days is, if you had opens and positions in the energy sector, you had to take some profit yesterday. And I made a YouTube Chronicle before the show started. And in the YouTube Chronicle, what I was saying is that favor stocks that at least if you were buying them last week, such as CNQ, which was one of the many breakouts in August 27, when the energy sector started a bullish momentum, well, make sure that at the end of the day that those stocks were at least above the 10-day moving average. That's what happened with CNQ. Now, you know that CNQ, the target is $30 on CNQ. The thing is that if ever during the day we have the energy sector, I'm talking of here, that actually goes below 170 points, then all of you who have opened some positions on August 27 when the sector started a bullish cycle, if it goes below 170, that will be a time to close all of your long positions on the energy sector. So this is why it's important to actually be quick to take some profits in a lot of your positions on the energy sector, especially knowing that this momentum was going to be short-lived because we still have not yet reversed a downward trend. Now, this is actually what we have on the energy sector. Concerning the mining sector, though, a slight resuming of the bullish momentum, but still, look, it's a minimum increase that continues to bring us within a sideways formation for the mining sector. Elsewhere, we have seen a lot of weakness among consumer staples sector on the Canadian side, but so far, no stocks are clearly breaking down, but the sector is testing its support. On the US, there are no sectors that are in a bullish cycle. All sectors are neutral. A lot of sectors are actually going down today, especially the utility sectors, because so I think that rates are slightly going up. But this week, though, is going to be a week where it's going to be really volatile. We have a lot of indicators that we're waiting for. Today, we had the PMI, Chicago PMI, that came out slightly lower than estimates. We're going to have the job data that come out on Friday. That's going to be really important because the Fed said that they're going to be data dependent. So if the economic indicators this week are negative, well, then a lot of analysts are going to expect that the Fed will not raise the interest rate, and then we might have a pursuit of the rally if the Fed doesn't raise interest rate. But if the economic indicators are strong, I think what we could have, it's either a pursuit of the decline or a slight rally, because investors might say to themselves, look, the economy is strong, so the Fed is going to raise the interest rate. It is good, so let's continue to buy. Or he's going to say, you know what, let's sell some shares right now, simply because we think that if the Fed raises interest rate, it's going to be a negative for stocks because companies are going to have to pay a higher interest on their borrowing costs. So basically what I'm saying is that the comments on the Fed members last week didn't give us a clue, and really we can't not know how the Fed is going to react to the data that it's going to receive this week from the economic indicators. Now, I'll ask another questions here. At what price do you see tech resources in the mining sector? So it's good that you're asking this question now, because the mining sector is one of the strongest sector that led the rally on the TSX. Now, if we take a look at tech resources, what is be the good entry point today on tech? Well, first of all, tech is already reaching a resistance there at $10. So for me, I want to see tech breaking $10. So yes, for me, that's going to be the case. And now you had two entry points here. When you had a sideways formation, you had an entry point at 897, another one here at 909, and another one here at 939. And now for me, it has to go above $10 though for tech resources to be interesting, because this corresponds to a resistance. Also, we're going up on weakening volume, which shows that the strength of this rally is not strong enough because there's still some weakening volume. So the appetite of buyers is not strong enough. So this is something I kind of don't like with a stock like tech resources. And for me, it's $10. That's going to be the go on a stock like that. Can it reaches that point today? I definitely doubt it, because I don't think that is going to have, investors are going to have a lot of appetite to buy risky stocks or I won't say speculative, risky stocks, because it's in the mining sector, I would say, or yeah, risky, I would say. And because we don't know what the Fed is going to do. And we're waiting for some economic indicators this week, and I definitely think that it's only after this week that we might actually have or some clues about what some Fed members are going to do after those economic indicators will be released. But $10 for me on tech resources, that's the go. Now, Sophia has a question here. PGN. Volume is on the rise, indeed. Volume. And you meant intraday wise? Yes, intraday wise is a lot of activity on that stock. The stock is close to breakout. Great observation, Sophia, because yes, we're testing a resistance on that stock. I'm considering to buy. Can you give me your opinion on the risk of this trade? First risk, look how the stock increased, 20.79%. Second risk, close to the overbought situation. So that means that even if the 50-day moving average is around 125 or this former resistance is around 110, which will give you some percentage though from that price to 110, which corresponds to that former resistance. The fact that we're close to the overbought situation means that the wave of buyers that bring the stock at those levels might not continue to bring the stock higher. So this is something that I don't like. Now let's take a look at the histogram. Histogram, I have nothing to say, doesn't give us any clue. So it's mostly the stochastics that I'm looking for. I think really that the risk is that you might not have the opportunity to take some profit quickly because the buyers will not step in to allow the stock to go higher. This is what I'm seeing with the stochastics. Weak volume, even if the stock is higher than those ones here. This is something I kind of don't like also. So those are the risk factor I see on that trade for Paragon Offshore. However, if you're willing to buy, let's say a quarter of normal positions or a fifth of the normal positions, as long as you're willing to get out quickly, let's say 80 cents maximum, okay, because still at 80 cents you'll still lose 10%. So that's still a big loss potential. But if you're buying some, not a full positions, but a quarter of a fourth of your normal positions, I would say if it's a speculative trade, make sure that at $1 you take some profit or you close that position totally. I would not hold it overnight, definitely. So $1 you close that position, and 80 cents you get out. So that would be something that you could do, because I still see a lot of risk on a stock like that. Now, knowing that the week will be volatile, if I open up positions on a TVX or HVU and hold it for the week, will that be a good strategy? Well, that's definitely another good question that you have here, Sophia, because technically speaking, all those ETF, TVX, and HVU, and are all so far in a clear neutral range. They're still waiting for the next direction, just like the indices. Now, would you get in within that sideway formation? We'll get back to you in the next segment with the answer.
Find answers to your questions by emailing your host at btm@decisionplus.com.
5 good reasons to manage your investments with National Bank Direct Brokerage. Commission fees fixed at $9.95 anytime for all clients and starting at only $6.95 for active investors. No administrative fees if you hold at least $20,000 in your accounts. Registered accounts available in U.S. currency. Powerful tools to help you manage your portfolio. Award-winning customer service and satisfaction levels amongst the highest in the industry. To learn more, visit nbdb.ca or call us now.
Real-time coaching has been created. We search and classify critical reports and technical movements. You can visualize or hear the best buying and selling opportunities. Get real-time advice all day long and 3 live coaching shows per day. Let us do the work and save your time for trading. Try marketgurus.tv free without obligation for 10 days in the menus above.
No. Welcome back, folks. So we have questions from Sophia here about HVU and TVX. Well, it is true that this week is going to be there could be a lot of volatility on the indices because of the economic indicators that will be released. However, nothing says that the markets will not stay calm, right? Wait for the Fed's decision, because just by looking at today, I know today it's not a simple to actually predict what's going to happen throughout the week, but we're still neutral. So if markets stay neutral within that range throughout this week, your positions on HVU and TVX will not pay off that much. Because the thing is, those ETF, they usually tend to go up when investors are buying more protection. And who says they're going to buy more protection if ever we have good economic data? So predicting that those economic data are going to be good or bad, we don't have here in Decision Plus the resources to predict that. And this is why I think that you rather stay technical, meaning that on HVU, if you want to get in, you have to wait for the ETF to go above 74.60, because that would be the clear break of a resistance. On TVIX, it has to go above $15, because that would be a clear break of the resistance. So I say stick to the technical, and I think you'll be definitely better off instead of predicting what's going to happen, because we don't know if markets are going to stay neutral throughout this week, because investors might say, you know what, let's keep the markets neutral and then wait for to see what the Fed is going to do before acting. And this is something that right now we think that as long as we stay within this side of information, there's no clue that allow us to say, are we going to have more of a new bearish cycle or more of a bullish cycle? So it's kind of tough right now under those conditions to determine what's going to be the next direction on the markets. Now, hi Chris, would you consider a lower low than today's low on the market, and this is as a signal to possibly go short? Yes, a lower low than today's low. Yes, actually this is our target though. On the SPY, which is here on the SPY, what we're waiting for is to see the index reverse that upward trend there. So the SPY will need to go, of course, lower than today's low, which means lower than 197. That will definitely be a clear opportunities to short. And one thing that make us say that we're gonna have nice short opportunity is, first of all, by looking right now at the indices. If we take a look at marketgurus.tv in terms of in terms of the list of the stocks, if you take a look here on New York, out of those many technical patterns, the patterns that there are most of the stocks, it's the neutral formation. So there are 454 neutral range. On the NASDAQ, 147. So that still shows that really we have a lot of stocks that are in a neutral range that could start a new bearish cycle if ever the SPY goes below 197. If it does go below 197 on marketgurus.tv, we are prepared. We're gonna close our positions on that bullish ETF that we have recommended here and there when the markets have started their rally. So right now it's definitely something that we're monitoring pretty closely if the market goes below 197, 196. Well, so yes, it's a great observation you made there. Below that point, there's going to be a lot of opportunities to short on the markets. Now, for day trading, folks, there are some opportunities that are interesting. Of course, one of the best opportunities, best pick today for day trading, it's in the energy sector. It has been that stock here, BCEI. So one entry point here, another one there, and all those entry points were when the stock broke out of a sideways formation. You also had one here too. Now the next entry point is going to be at 813. Can it does that? You see, we're already testing the 30-day moving average, which corresponds to a form of resistance. So I think it's going to be tough for the markets to do that. But if ever we have a new high intraday on the energy sector, we could definitely see the stock reaching 1033. So that is something that is interesting. So yeah, so this is actually something. Now Z, you're talking about my questions. If my answer, if ever markets goes below 197, then a stop buy order seems the obvious choice for HVU, HVI. Well, HVU, HVI are two opposites, just to clarify this with you, Z. So yes, if ever markets goes below 196, of course HVU will be interesting. As for HVI, that's only if markets go above 200 points. So those are the critical targets that we have. 200 points, HVI, below 196 on the SPY, HVU. So those are actually the two critical points that we're watching before actually considering to buy HVU or HVI. So great to mention that, Z. But as I also give you the targets that we're monitoring that will determine the entry point on HVU below 187 and on HVI above 200 points. So that's it, folks. See you tomorrow on the Swing Trading Show. Today we have markets that remain calm. Some opportunities here and there for day trading, but really a limited opportunity because this rally here has been short-lived. We're still within that neutral formation. It's tough to say what's going to happen in the market, but this week is a week of economic indicators. And if the Fed say they're going to be data dependent, definitely a lot of investors are going to look at the economic indicators to see if ever the Fed is going to raise interest rate or not in September. Today, we had a Chicago PMI data that came out. They were negative. So we'll wait for the other indicators, especially the one on Friday, where there will be the job report on the government. So that said, see you tomorrow on the Swing Trading Show. Have a good trading.